So, good afternoon, good morning, good night. We will be initiating our scientific session for a finance and trade related to instruments and mechanisms for sustainable development. We will be having 5 presentations, and we will be starting with Luc Lapointe, Capitals Hub Canada, with the abstract 110, Democratizing Mining Finance, a Digital Marketplace Framework for Equitable Resources Distribution and Sustainable Practices. Luc, if you can share your presentation.
Absolutely.
Perfect.
Can you see my presentation? Yes.
Yes, it's okay. So the floor is yours.
Thank you, Lorena. Good morning, good afternoon to everyone. First of all, thank you to the WRF to invite us to make a presentation on the work that we've been doing over the past couple of years to help democratize access to finance to ASM workers around the world. I'll be speaking on behalf of Capitals Hub Canada, but also speaking about our work. I'm a teacher at the Javeriana University here in Colombia, but I'll also contextualizing my presentation as part of a capstone project that we're leading at the University Externado right now on implementing our proposal of a digital marketplace framework and how do we finance sustainably ASM workers around the world. So this will be the context of the presentation. And just to start, as I said, as I'm a professor at the Javeriana University, part of a global network of teachers that teach impact in sustainable finance and implementing new models, innovative financial solutions for different sectors. So again, Capitals Hub Canada is part of a global network of capitals coalition that was created by the World Business Council for Sustainable Development, looking at non-financial capital. So we focus a lot as well on nature and biodiversity evaluation as part of finance as well. So making sure that the ESG factors are taken into consideration. Again, when you look at it's interesting when you look at the ASM workspace as it is, the 45 million workers around the world, and there's a lot of pilot projects happening when it comes to financing ASM worker. But how do we scale this up? Right, everything that we do in mining, everything that we require will need a lot of finance. It's substantial amount of finance. But again, when you have discussion with the banks, and this is a bit of a framework that I wanted to present as well, when you look at financing, I mean, most banks, be it development banks or retail banks or development banks, face the same problem. Right? You have to comply with international norms. So again, those that are currently barriers, but also opportunities for us to start looking at how do we finance to scale ASM workers, is looking at the International Capital Market Association Green Bond Principle. So most banks around the world have to follow these type of principles when it comes to investing in whatever sectors that you're doing. And this is when the problems or the difficulties come when you talk about the ASM worker. Then you have the Basel III capital requirements. Again, if your type of lending is a little bit more risky, then you need you need to have more lending or more capital against ASM loans that you have. Then you have the EU taxonomy right now that are green, and the EUDR that's happening. So again, these are all barriers, but opportunity as well when you know how to address them as part of your finance. And you also have the UN Sustainable Development Goals. So again, trying to align finance with SDGs and international criteria. So again, the regulatory paradox in ASM finance is the ICMA standard, again, the International Capital Market Association standard, which is standard and mandatory for banks. The OECD due diligence, AML, KYC compliance as well at the local level. How do we do this? And it's very interesting because we're doing this project right now in a place called Marmatu in Colombia. Again, this will be a requirement for some of these workers to actually get access to finance or to the government that the program will be offering through AML and KYC compliance, first of all, right? Environmental risk assessment, again, mandatory ESG screening. So it rarely happens when you come to ASM workers. How do we apply this? And social impact measurement as well. How do we do this? Most ASM workers are really about surviving the days or making it to tomorrow. So again, how do we start changing the context and making this more transparent? So again, innovation opportunities, blended finance, or combining different type of of factors, social and green bond with traditional finance, transition bonds as well, which have been recently opened by the International Capital Market Association framework that helps the sectors, right? Start looking at how do we start looking at bonds or a bond approach to finance. Digital identity, again, looking at blockchain for KYC and AML transaction. Impact-linked bonds. So how do we start looking at these type of instruments? Now many countries have these regulatory sandbox that allows for testing innovative structure to relax compliance. And this is whom we've been working with in Colombia with Superfinanciera, and as well as other countries in looking at the standard, but going into these regulatory sandbox to inform. So again, we all know the scale of the opportunities or the challenge right now. 45 million workers, 315 million people that depends directly or indirectly from the ASM workers. 70 or 80% of ASM operations remain informal, lacking access to formal finance. 1.4 billion adults globally without access to formal financial service, not limited to ASM, but on a global scale. So in most countries, artisanal and small-scale miners struggle to access formal financial service due to their informalities, economic status, and creating a massive financial gap as well as an opportunity. So critical barriers, informalities, gender gap as well, 9 percentage point gap in account ownership in developing countries, geographic isolation. So these ASM workers normally are not in the big cities. So again, there's no banks that are close by. Lack of credit worthiness. Not because that they can't pay, but they don't have any bank account. So quite often it's hard to demonstrate their need and their income as they don't track them. Risk perception as well from financial institution. Again, going back to your opportunities, $25 and $30 billion annual revenue from ASM gold production alone. 20% of global gold supply from ASM operation, 515 million adults, digital growth, rising demand for critical minerals. So it's not just gold, but we're looking at all the other sectors. Project that we're looking at doing right now in Peru, for example, when it comes to copper. ASM worker working in the copper industry. So again, well, the net zero opportunities that the world is facing, 300 times more demand for critical minerals, 20% overall increase in critical mineral demand from 2020 to 2050, $378 billion value of critical minerals trade, and 444% increase in demand for lithium when it comes to that place. So a digital and regulated financial marketplace, what do we mean? First of all, digital identity, blockchain-based identity verification for informal miners. So again, when we talk about blockchain, it's important to make the difference between regulated and non-regulated blockchains. We're looking always within the context of a regulated blockchain, not a non-regulated. So nothing to do with cryptos, but more with digital assets. So novel tokenized assets. Again, how do we start tokenize different asset class? So it could be gender, it could be greenfield or brownfield, it could be access to equipment, it could be decarbonizing. So how do we start looking at financing ASM? We're looking at large scale opportunities to issue bonds for specific asset class. Oh my God, it's already that time. Well, novel tokenized asset, again, nature-based solution, energy transition, clean technology, gender lens mining bond, brownfield redevelopment tokens. Optimal asset class federations, again, risk return segmentation, integration of ESG frameworks within the finance, again, bringing that type of knowledge to ASM workers or those that finance ASM sectors. Regulatory compliance all the time when the asset structure meeting diverse jurisdictional requirement. Our project right now is looking at institutional. The problem right now, sorry, with investor preference is long-term bonds with predictable returns impact gender lens bond, fractional ownership through mobile platform, and sovereign-backed instruments. So again, miner needs working capital, which is often hard to finance. Equipment finance, again, could be created as a part of an asset class, is what the project that we're looking at implementing right now. Insurance, market access, direct buyer connections as well through these platforms. So multi-dimensional value creation, financial, social, environmental, and economic financing. Strategic support from critical minerals. Again, 40% of the gold, the world's gold, Africa produced for the 40% of global gold supply, much through ASM, 25% global reserve. So again, these numbers that you've seen in the past, same thing that's happening in the cobalt sectors in DRC. 68% comes from ASM workers, but again, the lack of access to capital is one of the biggest issue. And how do we move from a pilot phase into scaling up finance through a bond approach? So digital marketplace, market potential, $1.4 trillion, $8.24 billion of cryptocurrency right now, a mining market by 2024. 73% of the organization are currently moving to digital. So you see more of this happening. As I said, the emerging economies have been moving much more faster when it comes to digital or digital asset integration into the banking sectors.
Maybe you could go to your conclusion, and then during the discussion, we will be coming back to your data.
Yeah. So again, to the conclusion is transformative impact and implementation for government, for financial institutions, for civil society. So again, our proposal focuses on, our work focuses right now on scaling up finance instead of a pilot approach, going into a bond, using thematic bonds to finance the SM sector.
Okay. Thank you very much, Luke. Don't worry, during the discussion, we will be coming back. No worries.
Thank you.
Thank you very much to you too. So next presentation, maybe you could open your presentation right now so you could see if it runs okay. Next presentation is abstract number 56, Global Syndrome at the Local Level, the Politics of Illicit Financial Flow in Ghana Artisanal Small-Scale Gold Mining Sector, with Abigail Tetet Yankee from Ghana.
Good afternoon to you all once again. So I'm presenting on global syndrome at the local level, the politics of IFF in Ghana ASGM. I'm presenting on behalf of my colleagues, Fred and Freeze. And as an overview, I'd like to say IFF poses systemic threats, not only financially, but to global trade and then sustainable development. In Ghana, for instance, it erodes resources needed for SDG financing. And Ghana stands at losing an estimated amount of 138 million annually. Whilst I must admit that whilst the LS large-scale mining is well regulated, to a large extent regulated, that of the ASGM is opaque. Various research has been done, but mostly focused on the financial leakages. And this study aims to focus on looking at the political economy by through qualitative interview of chiefs, patrons, officials, legal and illegal miners, legal and legal traders, and then various regulators. This aims to connect the nexus between local realities and then global IFF as a missing piece. So these are my findings. Within I must say that it was done on 3 different phases. I looked at the mining site where I interviewed both, like I indicated, the legal and then the illegal actors, and then the trading sector, and then also interview regulators. At the mining site, it was revealed that it was revealed that bureaucratic and politicized licensing exclude the various communities and youth, which result to various illegalities. That is to say that the bureaucratic nature, according to some of my participants, they indicated that just acquiring license alone for mining, they have to live where they are. It's a more centralized system. Let me put this caveat that this was done last 2 years. This paper was done, the data was collected last 2 years, and there have been changes. But then at that time, now it's a bit more centralized. The government is trying to centralize it through a new act. But then as at that time, there was a long bureaucratic nature in acquiring licenses. And then it appears as if you may have to have money to get your issues through, which doesn't even guarantee success. This usually sway the youth from various agricultural sectors and other trading to the illegal mining sector, which we term in Ghana is termed as galamsey. Another issue which also plays role in perpetuating local illicit financial flow within a Ghanaian context is the issue of land administration in terms of how lands are acquired and then dispossessed. So one of the key issues which came up was the fact that most of the lands were given to foreigners, and then the foreigners rather have the money instead of the local communities. And this usually perpetuates some kind of informal interactions where the issues particularly surrounding how the land is paid, and then the various revenue with regards to the land acquisition and then the formalities are not really clearly regulated. Another issue was survival through informal and illegal mining, in that they had to resort, due to the challenges that they had in acquiring land, they resort to illegal mining in terms of, because they cannot get licenses to acquire land. Favoritism and selected enforcement, which entrenches distrust, strengthening informal network, was also one of the key issues. Galamsey therefore provides the platform for the youth and then the communities to earn income despite the risks that they were engaged in. Another issue was delay, which I've mentioned earlier, weak monitoring and bottleneck which pushes the whole mining architecture into various informal economy by foreigners and then smugglers. I've already talked about the methodology briefly, so I will skip it. This is the finding from the trading hub, Obuasi, which shows that dependence was more on foreign sponsors to buy the gold, who finance purchasing of bulk gold. And then they end up smuggling it because they didn't even buy it through the rightful sellers, which was the PMMC, who is the sole regulator then of the ASGM sector. The decline of PMMC role. So gradually, the actors, in terms of the traders, stop selling to the precious mineral company and sells rather to illegal mining. So I realized that during the field work, when you go to the illegal mining trade hubs, they rather have more customers than those who are licensed and open. There's where you rarely find people buying or selling. Another issue which resulted in this was the fact that, just like I indicated in the mining sector, within the trading hub too, the centralization of the licensing, they also have to acquire license from the Greater Accra and then the various regions. And this was an issue. So they also resort to illegal means. Unattractive prices and unregulated prices was also one of the issues. For foreigners, therefore, offer higher and flexible prices than the regulated body. Unstable dollar drives traders into informal, and let me admit that now we have a bit of stable currency, unlike just the past year or two. And then they also operate without licensing. I realized that from the data gathered, it was indicated that though some of the traders had licenses, they used the same license to open about 3-4 shops, which was some kind of informalities. And there is no regulation regarding where the gold is coming from, in terms of there was poor traceability. So they directly buy from the illegal miners, which we term as galamseyers, resell to foreigners unrecorded and then untaxed as well. Mercury use, though banned in Ghana, but was openly sold, and waste sand was also resold illegally to foreigners. At the exports and regulation. So one of the phases looked at the regulatory field space with regards to how it is regulated. So for Bank of Ghana, for example, was charged with the buying of gold under the gold for oil, but it ended people rather resorted to smuggling and tax evasion, which undermined the program. FIC, though, was tracking laundering with all the efforts, but weak due diligence by other actors and poor coordination limited its impact. Taxes captured was only at the export level and neglects the ASGM sector, particularly the illegal part, which forms chunk of the scope of artisanal small-scale mining sector. Also, promotion of entrepreneurship by Ministry of Trade to discourage illegal mining, but it was unfounded, and then they even find illegal mining more lucrative than venturing into any entrepreneurship. Let me admit that if you look at the statistics, illegal mining captures almost more than 300 of unlicensed miners against 300,000 against 13,000, but lack of capital, foreign financiers dominate this space such that it is more lucrative to engage a foreigner to get money to engage in illegal mining rather than going to the banks with high interest, etc. Few prosecution and selected arrests. Prosecution was an issue, and then even allegation of politicization of licensing, and even political actors engaging in illegal mining or financiers was also allowed as evidence in the data gathered. I recommend at the end of the day that there is a need to enhance institutional independence across all levels, also to enhance transparency mechanism in production, pricing, and export, integration with global norms, and then continuous capacity building is very key at all levels. And particularly, you realize that there was a lot of communication gaps. So multi-sectoral engagement is very key, and global governance lens in terms of learning best practices from Africa and Europe is also very key, and to enhance the ASGM sector and address illicit financial flow. I would like to close by saying that IFF in Ghana's ASGM are not just financial leakages, as most of the literature says, but it demands a lens, a shine on a political economic syndrome where global demand and local governance failures collide, turning the gains of gold into lost opportunities for development. A hopeful part is the fact that curbing IFF demand engaging the complexities at the local level, not limited to empowering communities, decentralizing governance, and aligning global trade with local realities that can turn ASGM into a driver of sustainable development. That is to say that currently there is a new shift there is a new act, the Gold Board Act, which is centralizing the saying, buying of gold and all that. It is very brilliant, but it's very important to take cognizance of the various policies within the political, social, economic space of ASGM to ensure that the former challenges and mistakes are not reported. Thank you very much.
Thank you. Thank you.
Your diverse
Thank you. I will appreciate if speakers could really take care of the time, respecting the time of the other speakers and the time we have for this session. We can be flexible in a couple of minutes, but try to manage time, please. Next presentation is presentation number 78, Risk and Perspective of Illicit Financial Flows in Ghana's Extractive Sector. We'll be having Angela Alou from Oxfam in Ghana. Angela, the floor is yours. You can go for full presentation mode. And as soon as you're ready, we can start your presentation.
Okay, good afternoon. Thank you very much for the opportunity. So I'm presenting on behalf of my other team members. So we have Abigail Teteyanke here and Dr. Ama Hinikojo as well. Presenting on the risk and perspectives of illicit financial flows in Ghana's extractive sector. Right. So basically, we had been part of a 6-year project that focused on curbing illicit financial flows. We had collected primary data And at the end of it, we realized we had interacted with a lot of people. And at the beginning, we realized that some people weren't very familiar with the concept of illicit financial flows. But at the end of the period, we thought there had been some awareness, especially because of some of the events that we had organized and the fact that there had been greater awareness within the country as well about it. So we thought it would be quite useful to see just how the perceptions had come up at the end, although we didn't, in a sense, document what the perceptions were at the beginning. That was just more what we ourselves had realized. And one of the things that came up was that the illicit financial flows were very prevalent in the extractive sector, although as our findings show, there are perceptions that there are some other sectors that tend to have quite some prevalence of it as well. So we went back to many of those that we had interacted with and then basically tried to engage them again to get a perspective of their understanding as well as their perception and then what they thought was the way forward. So for this, we try to make use of an open questionnaire and then also just some key informant interviews. So we had about 30 respondents. They were mostly all people who had been with the organizations for more than 10 years. And then many of them were at middle level management. So that meant that they basically had an understanding of what the organization stood for. So the respondents came from academia, so from universities, from anti-corruption institutions, from financial institutions in Ghana, civil society organizations, some private sector organizations, as well as INGOs in Ghana. And then based on the content analysis, so some of this is not new. We make references to other sources that had come up with it already, but essentially it's confirmed what we realized in the exploration as well. And I believe Abigail alluded to some of it as well, that when it comes to exploration and licensing, there is the potential to abuse the mineral exploration licensing regime because of some ambiguities that there may be in the law. And when it comes to extraction and production, so there's the incentive sometimes to underreport production volumes and values because of the taxes that the organizations have to pay as well. And then in terms of processing and refining as well, even though that is quite on a minimal scale, but there was also a lack of transparency in the processing and refining. As Abigail mentioned, there have been some regulatory changes within the country, but this data was collected as at 2023, and then some of these changes had not come in yet. When it comes to sales and marketing, there's also the potential to manipulate the trading markets for either personal or corporate gains as well. And then for the revenue collection bit, we also have the potential abuse of the tax collection regime. So essentially, which also leads to why the term is even illicit, because we have both the aggressive tax avoidance as well as some mispricing and then tax evasion as well. Then in terms of financial transactions, so weaknesses even in financial intelligence as a result of the lack of cooperation even among the various industries and the various regulatory organizations that operate within the financial intelligence service. And then within the legal and regulatory framework as well, you have a number of different types of legislations that are scattered all over, coupled with a lack of cooperation among the various institutions. And then with international trade and agreements, there's limited global collaboration and monitoring. So these were just an overview of some of the risks. Then in terms of the questionnaire that we gave out as well, right? So for some of the factors that our respondents alluded to, corruption came up really as one of the biggest areas that accounts for why illicit financial flows are quite prevalent in Ghana. And then we also had weak regulatory institutions, followed by the lack of law enforcement, and then tax evasion, and then inadequate financial regulation and profit shifting. These were the ones that stood out. And all of these seem to align with what is known in the literature already, as well as what we have observed within the country itself, that because of, for example, the 4-year political cycle, there is always lot of opportunity to essentially try to enrich yourself quickly, right? Both for individuals or ensure that you are in favor with the government and power. We also mentioned already that there are a number of institutions, but there is that kind of regulation. So interestingly, when it came to the industry, so in line with the focus of the study, the extractive sector was the industry with the highest, but you also had banking, real estate, trade, and others. And then for the suggestions to curb illicit financial flows, one that stood out was strengthening monitoring systems through digitization, another tightening financial regulations, improving enforcement, sanctions, as well as increasing awareness. And we realized that it would be important for the country to focus on strengthening the regulatory framework, enhancing monitoring and enforcement mechanisms, and fostering international cooperation in order to curb illicit financial flows and then earn the revenue that is due the country. Thank you very much. So I'll take any questions. I hope I did well with the time. Thank you. All right.
Yes, perfect. Thank you very much, Angela. So for question, we have a chat where you can write your question. I will be taking note of it. And at the end of the presentation, we will be having a discussion moment where we can go and see your question, and we can have a little discussion on that, a little debate. So thank you very much. And the next presentation is abstract number 20, Impact of Financial Mechanism and Trade Policies on Sustainable Development, a focus on low carbon economies and circular business models. Obiodun Olaiwola, sorry for the pronunciation, Obiodun, from Graceland University.
Thank you. You got it right.
I got it.
You got it right.
Sorry, I tried.
Thank you. Yes.
I always try.
That's good.
Thank you very much.
I'll be presenting on the impact of financial mechanism and trade policies relating to sustainable development, and our focus is on the low carbon economies and circular business model. With my co-author in person of Cousin Bashoye from Ponte University. And I'm happy to inform you that effective 1st of September, my affiliation has changed. It's no longer Graceland University, but Adeleke University. So I guess subsequently, during the publication process, that changed. So that's regarding that information. Now, we discovered that recently, there has been a global shift from traditional linear economy models to more sustainable alternatives. And this is being put forward as a result of the global pursuit of sustainable development goals. And because of that, we discovered that central to this shift are the issue of low carbon economies and central business model, and which require both strategic intervention through financial mechanism and international trade policy. And as we can see, international trade mechanism and trade policy are key and very relevant when it comes to the issue of global transition towards low carbon economy. And we know trade policy in any economy, they have a considerable impact when it comes to shaping movement of goods and services from one international boundary to another. And to do this, we need a kind of a synergetic application of a very robust financial framework to carry that out. And basically, the both aims of the paper is just to examine how effective or the impact of this mechanism on policy relating to sustainable development by focusing our attention on these low carbon economies. And we make use of countries like Germany, China, India, and United States. And our data span through 2000 and 2024. And in using methodology, we decided to adopt a fixed effect model. But particular to that, our theoretical foundation has to do with ecological modernization theory, EMT. And this theory posits that market mechanism, trade policy, in line with innovation, are very key when it comes to achieving environmental sustainability. And that was why we picked that theory. And we're able to get our baseline model through fixed effect model. And that's where you have SUS as a function of variable of interest. Now, quickly, I will go to findings. And in our findings, we'll try to make use of some techniques just to describe our data through visual and statistical overview of how trade policy and financial mechanism relates to sustainable infrastructure. And there we discover that the correlation matrix and scatter plot, as you can see, reveal a moderate but negative correlation between subsidies and sustainable infrastructure. But when it comes to the issue of green bond, we discover that green bond and clean development mechanism, that's CMD, they have negative trend as well, but a very weak correlation with sustainable infrastructure. Although we take a step further by looking at the trend in the year to see how our data behaves over the year. Sorry, are you with me? Because it seems I can't hear myself.
Yes.
Hello?
Yes,
Okay.
we are
okay,
here.
Thank you.
Everything is okay.
That feedback is very okay. It's very, very important that I get that feedback. So from the trend, temporarily, we decide to look at the trend pattern just to see how our variable behave over the year. And there we discover that temporarily, subsidy shows a rising trend. Green point 1.2 also show some level of fluctuation, while the CMD show variability. And this trend suggests active policy effects in response to global sustainability goal and economic condition. And through trying to look at this behavior, what could be other implication? It could be that subsidy keep rising in popularity due to government commitment to financing clean energy, climate adaptation, and green technology. But all this may happen in the short run period if they are not a good match by corresponding rising in revenue. So therefore, we discovered that there could be a kind of integration and stability across green financing mechanism, and there might be need for projection. And that was why we try to look at a projection, 10 years projection. And when we get to that place, I'll try to show that so that we'll see what the projection look like along the line. So then another thing that we try to find out my research is just to look at this impact of financial mechanism and trade policy on sustainability. Then the reason why we pick fixed effect is because we discovered that the p-value of our random effect is less than 0.05. And as such, we try to reject the alternative, the non-hypothesis of using random effect. That was why we pick fixed effect. And the result in table 5, table 6, as we can see it here, revealed to us that the coefficient of green bond subsidy are relatively low and negative. I mean, green bond is negative, while that of subsidy is positive, and they are statistically significant at 1% level. And under the country specific, we discover that there are significant differences among the countries. That is, our countries of interest, China, India, US, because they have negative coefficient, while Germany has a positive coefficient. And the implication of this leads to our conclusion. And under our conclusion, I'll be able to talk a little about what those results or the findings trying to show us. So now, based on that finding, we concluded that subsidy, because it has a positive impact on sustainable infrastructure, it indicates that there is every possibility of getting a support for public sector intervention, and this may attract private investment as well. Then also we concluded that clean development mechanism, CMD, does not show a measurable impact on sustainable infrastructure development, which means that there is a kind of paradigm shift towards modern carbon instruments, which may be caused as a result of poor regulatory reforms, diminished policy relevance, lack impact consideration, and as such, there could be need for reform or replacement regarding that. And thirdly, we concluded on this country-specific findings that China, India, and United States are characterized with discouraging performance when it comes to sustainable infrastructure. And this may be as a result of policy fragmentation, insufficient investments, and aging infrastructure in this country. While that of Germany, on the other hand, show a better performance due to aggressive green policy initiative and as such, increase in domestic demand. And that takes us to the recommendation. And we try to make recommendation, based on the findings that the US, India, and China, they should enhance promote environmental regulation. And as such, this will encourage private sector involvement and minimize industrial lobby. And this will help to promote sustainable infrastructure development. While that of Germany and the US, we recommend that they should diversify funding so as to ease fiscal burden. And with that, I'll stop. So thank you for listening. I guess I'm able to keep my words regarding the timing.
No. Don't worry.
Okay. So thank you for
thank
giving
you.
me. Let me put it that way.
Our last presentation is submission 140, mining and social responsibility, assessing the role of community investments. Emilio Castillo from Universidad de Chile. Emilio. So
thank you, Lorena.
As soon as you're ready, we can start.
I expect that you can see my screen, right?
Yes, we can see.
I'm trying to do my best to keep within the 7 minutes framework that we have. So,
okay.
Thank you very much.
The floor is yours.
And I have my timer here as well.
Okay.
Well, thank you very much for the invitation. As Lorena was mentioning, today I will be presenting briefly our results on the research on mining and CSR investment, particularly on the role that social investment have been taking place in the last few years. So I know that we might be running a little bit out of time, but still you have my email. Any question that I'm not going to be able to answer during the session through the time, please feel free to email me and I'll be happy to answer any doubts or any question that you have regarding the presentation. Okay, so thank you for the organizers again for the time for present. So just to give it brief, but I think that I still want to take a time to mark up the context that we're facing. So now we're facing the context of an energy transition. So this is narrative and the context that as a world we are framing our minerals nowadays. So we're expecting a change in the amount, the driver of the new technology that we will generating our electricity and the power that is required in different parts of the world. And this change, the technological change and the change in the energy matrix is making more aware from the perspective of consuming nations like the US, China, Europe, and so on, more aware on the availability, but also on the diversity and the stability of the supply chain, particularly on the minerals that are required for those new technologies. But also this changes our perspective as the producer nations of those minerals that are required for these global needs. And in that case, we start to face an old dilemma that we have, particularly in mining, that is how global needs are balanced with local concerns. And this sort of allow us, and this is kind of our research idea, is that we believe, and this is a strong belief that we have as a research team, is that those social investments that companies can make at the local level can move from a transactional perspective to a development tool. So bolster and encourage development from the local communities. And the key research question that we expect to contribute in this presentation and in our research is on how are mining companies' community investment or social investment consistent, transparent, and effective. This is that we want to check. And let me go briefly on what is the methodology approach that we're taking here. So this is kind of a challenge. So we're going to be measuring social investment from different set of mining companies. In our database, we gather data from 42 mining companies, and we also try to analyze different set of companies. So we have the ICMM companies, so companies that are members from the International Council of Mining and Metals. These sort of like a state of companies that are they expect to adhere to more higher standards in their social, environmental, and government approaches in the different operations, mining operations that they have around the world. So mostly international companies and non-ICMM members as well. And the period of analysis is 2018 to 2022. The source of data is the sustainability reports of the company, and that's why we're kind of limited because of the reporting of most of the companies has been more clearly developed since 2018, and there is a lack on the reporting of that information. But also we're going to be looking at the financial reports from those companies to try to check any other information that we have regarding data. The metrics that we use, we call it the corporate social investment. So it has many names in different companies, but we try to put it all the investment that they do regarding community investment, social, socio-environmental investment. And we try to normalize depending on the profitability, but also on the revenue. I'm going to be focusing particularly on the revenue side that is closer to several other measures that other governments and companies do. And also we try to classify the focus of those projects in terms of what sustainable development goal they are trying to support or encourage or improve. So these are the results. First of all, I want to highlight how companies have a generally high degree of transparency in terms of reporting the social initiative and the amount of money that they're investing there. However, maybe there is a lack of information on sort of what is the focus of that information, and particularly on where is that information taking place. For example, if we have headquarters in Australia, in Canada, or in Europe, we still don't have enough information to know if that investment, that social investment, is being made in Australia, or if that investment is being made in some of their operations around the world, in South Asia, Africa, or in South America as well. And the other result that I want to highlight is the amount that companies are investing in terms of the total revenue. So on average, we might be facing around 0.5% of the revenue that they have, and this is big dollars that we are facing. So this is generally, just to get you like a sort of a scale, companies or the normal royalties that mining companies might be facing for the government is about 1% of the total revenue. That's a 1% royalty ad valorem for companies. And now we are seeing, on average, companies invest half of the amount that they are transferring to governments as royalties. So this is a lot of money that companies are investing, and still we don't know where in sort of the information and how effective that information or that investment is being into local development. And the last resort, maybe just to highlight very briefly, is that where is the company investing? And here we confirm that most of the companies are investing in promoting some of what we already expect that are positive impacts of mining activity. So poverty, infrastructure, education, and local development in terms of economic growth. So, but we see like an inconsistency in that companies should be investing in those elements that are expected to be more negative impacts in order to mitigate or compensate those negative effects. And just moving, I already saw the 1 minute left, so Lorena, thank you. Moving to the conclusions. What we observed in this briefly research that we're presenting is that usually there is a lack of standardization and transparency in some of the elements related to the corporate social investment. There is also some of the questions that we wanted to answer is about impact valuation and we didn't see that at all. So this amount of money that we're seeing, the 0.5% of the total revenues, no reporting on no measure of that impact evaluation, and that is for sure an element that we've seen that there is something to be improved by mining industry, because sharing and replicating successful programs could enhance the local development across mining regions. And with that, I think that it was kind of briefly on time, Lorena. So thank you for the time.
Yes, it's just, since we have limited time on Zoom, to have really a little time to discuss and to answer the questions. We have some questions already on our chat. Even though Luke already gave some answers of it on the chat, I will be reading and I will ask you, Luke, if it's possible that you could answer the question for all of us so we could register it and it could be available in the future. So the question was from Sharzad Manucheri, and it's: the digital marketplace is a very interesting and innovative approach relying on blockchain or other digital technologies. How do you ensure accessibility to this digital tool for miners who may have limited digital literacy or infrastructure?
Oh, thank you, Lorena. As I answered in the chat, at the end of the day, what we're looking at, what we're working on, and sorry, I didn't have the same structure as the other presenter because we're completing our capstone projects in about 2 months, so we'll bring the recommendations. But again, at the end of the day, what we're looking at the end through the digital marketplace is there's actually an economic and financial literacy component. So as part of the formalization process, which is the process that they use here in Colombia to formalize them, it's called Fomento Regional or Fomento Minero. So as part of the program, we built the education and financial literacy components on using digital assets and as well for them to actually get access to finance. So it's part of the program. So it's not just here it is, but it's part of a process that they have to go through to formalization. So again, they get their economic and digital financial literacy component.
I would like to go a little forward on it. I have experience in mine sector and indigenous people territories in countries where sometimes indigenous people have no category of citizenship. So they don't have, for instance, identity cards, and they do not have really access to banks. Are you aware of the situation? Are you taking care of it? It's in Latin American region normally.
In where we're working right now, in a few departments that we're working in Colombia, and the same thing in Ecuador and Peru. So we haven't faced that problem, but it's definitely something that we know exists. But most people here, the indigenous population, carry what they call la cédula, no? It's almost mandatory for everything that you do. But again, it's one component that we're looking at the end of the day. So again, for them to formalize themselves, get access to all the tools, right? Again, have the right identity documents if required to do the lending, but also looking at cooperative as a way to lend directly instead of individually, right?
Yeah, in this case, maybe cooperatives could be okay, because some countries gives to indigenous people like they call it Indian cédula de indígena, okay?
Correct.
But if they get their proper identity card for the country, they lose all their indigenous rights.
Right.
So it's a trade-off, and it's really interesting to look at it.
Thank you for mentioning this. Thank you.
Yeah, thank you, Luke. For Abigail, can you think on some solution that could help remedy these issues, such as local AM cooperative with more bargaining power to sell to the foreign buyers? It's a question from Robin Smith Gilly.
Yeah, if I get easy the question about the fair trade.
It's about your presentation. Can you think about some solution that could help remedy these issues as a local SAM cooperative, with remembering that during your presentation, you mentioned this illicit financial flow could have diverse flows that at the end may be local policy and global IFF, land acquisition and foreign, could be pointed out.
Sorry, can you repeat the question again?
Question is, can you think of some solutions that could help remedy these issues, such as local SAMs cooperative with more bargaining power to sell to the foreign buyers?
Okay, so yes. As I indicated, just in 2025, there have been a new political initiative to enhance that space. So, yes, so currently there is a new act, the Gold Board Act, which has established the Gold Board to regulate these activities, including giving access to even foreigners to buy gold. But previously, it was a bit fragmented, such that not well regulated. But now, with the various processes duly followed, a foreigner can buy gold with the Ghana Gold Board.
Okay.
Yes, except that the issues and the challenge with regards to transparency and then enhancing accessibility is very key, and we are yet to see that manifesting as we go on with a new directive of Gold Board overseeing assaying, buying, and selling of gold.
It's really interesting, Abigail, because
Very.
since you also mentioned some kind of weak law enforcement, so we will be seeing it maybe in the next year, during the next year, and maybe for the next conference, what is happening with it. So we hope to see you in 2027 with an upgrade of your research. It's really interesting.
I'm very much interested, like you're saying, but the issues surrounding elite capture, surrounding politicization of sales, politicization of licensing is still an existing challenge. And once again, we see how the Gold Board will address that. And I'm very interested in presenting that at the next,
And also, I was interested in maybe knowing if you had the chance, because it's not really your research, but if you have the chance to look for where the profit and the concentration of the wealth stands actually with this model of IFF flows at present time.
Yeah.
Okay. So the next question is from Sharzad Manucheri again for Angela or Abigail. Maybe Angela, you can answer it. Is one of the strategies to eliminate the IFF is the implementation of fair trade approaches, such as fair trade gold or fair mine gold. What do you think about the implementation of such approach in Ghana? Where do you see the challenges or bottlenecks for the implementing of such mechanism?
Okay, thank you. So I will start and then I'll see if Abigail would also.
Yeah, I think in between both of you.
Yes. So in terms of that, right? So we have another paper where we realize that even in with the large companies, right, who you assume would be in a sense better organized, because you still have the tax incentives, there were still illicit financial flows recorded. Right. So I just wanted to give that feedback first. But I think that it's been one of the challenges, because even with the Gold Board, as at now, you can't really tell the source of the gold. So I think that perhaps it would be a good idea, but it would definitely, as Abigail has alluded to, probably need some structure before that can be implemented. And then you would see which way that goes. I know that in a sense for cocoa, there have been some issues like that have been come out in terms of fair trade and others for cocoa. But even with that, it's not fully solved the issue, although you can say that in a sense it's a little better there. So I think that that's something that has quite some potential, which can be looked at. Because, for example, we realized even in our previous research that there was actually gold even coming from Burkina Faso and other places into Ghana. and then just going through the system as well. So it would be good if you are able to not just have it being sold at the point of sale, but actually examine everything from throughout the whole value chain. So it's not just at the point of sale, but you're actually checking the source of it as well. Yeah.
Yeah.
So I think that.
Yeah. It's really interesting at work. I've been reading some papers from Burkina Faso and other places related to that. Next question was for Emilio. Emilio answered it on the chat, but I would like if you can go forward again because we are registering this session, so we would like it to be registered. The question was from Robin Smith-Gilly, and it is, how will transparent disaggregated company mind-side data assist in better analysis of impacts of these programs on the communities?
Yep. Thank you. Well, thank you, Robin, and thank you, Lorena, also for the question. I wasn't sure if I'm going to have enough time to answer, so that's why I was typing in the chat. So, so this is an important issue. So, usually when we want to do some better analysis on the impact valuation on how different investments are being or have a meaningful effect on communities, we usually need more disaggregated data. So, for example, let me go for the contradiction in here to explain this. If a company is only saying, let's say an international company is saying, well, I'm investing $500 million, maybe that's too much, but $150 million around the world, I have no idea where this investment is taking place. Maybe closer to their headquarters. Maybe this might be focused on a regional, on a few operations that they have maybe in Central Africa or in West Africa, or maybe they are in South America. I have no ability to discern or to confirm where is this investment taking place. And again, if I know where this investment is taking place, I can also do some different analysis, maybe with institutional data, maybe where from coming from governments or regional governments, and I can check maybe since this investment is taking place, I can see other indicators from this local community or this region that have started to change across time. So I can try to at least elaborate some sort of causal in this causal explanation, but without that, it's really hard to do.
Yes, because at the last, normally it goes for the transactional stuff. Like, yes. And that's not really the idea.
And that's kind of what we want, moving from transactional perspective to something that is like a tool for development. And that requires valuation, impact valuation.
And also, have you explored the IDH index?
Yes, but usually the HDI index is more of a national level indicator. There are some of them that may be focused for the at regional. I know that there might be some studies that try to focus on a communal, let's say, from the like a more local level.
Yeah, I
but
have for
they're not that common. But they are not that common
because but there is data in many countries. I've been working with it, even at the city level, even
Maybe that would be very interesting to compare.
Yeah. So
that's an interesting point.
Thank you very much. If we don't have more questions and respecting the time of everybody, Emilio needs to leave the session. So I thank you very much, all of you. I hope to see you in 2 years from now with an upgrade of your research, mainly Angela, Abigail, Obiadum, Emilio, and Luc. Hope to see you again in 2 years from now.